Hi, so we are from Eurodollar, and Eurodollar is a Danish company, and we're a stablecoin issuer. So we're an EMI license. We've been approved under MiCA and so on. So we will next month hope issue a dollar under MiCA, and there the month after issue a euro, and that's sort of the start of it. But we don't want to talk, I mean, we can talk more about this if anybody has questions, but otherwise today we wanted to particularly talk about quality in stable coins, because we think that's actually one of the most important subjects for this particular coming year, because it's going to determine how the market is going to be split up between EMI, stablecoin issuers, banks, central banks, and so on. It's a very important aspect to discuss. So we would have loved this to be more of like a discussion, but it's very short, so we're going to run through it and see if we can take some questions and some discussion points with you guys, okay? So here is the key market really that we're all getting after, the $500 trillion of global financial assets. That is the size of it. If you go to FSB, Financial Stability Board, they have all the numbers you would ever want to know about what are the market sizes for just about any asset class. But the global financial assets are 500 trillion. All the transactions that happen there is, of course, much more than 500 trillion. But this is what the grand prize is for crypto, right? If we can move this on-chain onto new technology, that's where we want to see. That's where we believe that things will start changing. But what we also have figured out, I think, or what we seem to intuit now, is that that is not going to happen before we start seeing money of different kinds of quality starts coming on chain. So if the right type of money in sufficient quality is not on chain, these markets are not really an opportunity. So we've drawn it in this type of curve, which basically says if you take quality of money, and you can intuit the idea of money, we'll get more into it, but you can intuit the idea that some money is more money than others, right? A $100 bill is high quality money, and an IOU from me is not the greatest quality of money, even though, yeah. So that's it. But here's how we think of it at this moment. The real market size, if you look up, that's the y-axis, and then to the x-axis, we've got the quality of money. So if you think about some of the algorithmic stablecoins, some of the non-regulated stablecoins, we think the reality is that the market that they could access is actually not too big. That's what you can see here if you, well, you can see it, that's right. Basically here, right? And we think the first generation of the coins that are coming out now, which is the MiCA coins, also has sort of an end to it. We think there is going to be some sort of exponential curve where it says, oh my God, now it's all going to happen. But we're not there yet, okay? The quality is not quite there yet. Here in the other end is CBCD, right? That's the highest quality money. But which part of all this, what's going to happen in here? This is, we've put a little dragon because that's how you mark, you know, terra incognita. That's the unknown area. We don't really know how this is going to play out. Is this going to be banks? Is it going to be new institutions? Is it going to be CBDC? This is very exciting and interesting. And we think thinking about that is something that makes sense. So let's just talk about money quality. What is money quality? Now, there is one particular scientist, Perry Mehrling, who's well worth reading. You can find him online, where he's explained the idea of a money hierarchy. So there's there's an academic side to this. But if we just think about it, we can think about the idea that there is like an emergent hierarchy of money. As in, basically, there are money that you would prefer in certain situations, and then there are money you would not so much prefer, right? As in, some people will say, in the crypto world, where is this like, we prefer USDC over USDT, or we prefer this over another. And it's always some sort of implicit idea of quality. We think one is more or higher quality than the other. The key part of that is that it's not a sort of a deterministic thing, it's an emergent thing, right? It's something that happens by all the interactions, by all the things that are being communicated, an order of money appears, and it's usually hierarchical, and it usually have central bank money at the top. Now, what we want to, Kam will get more into this in later here, but all I can say is that we do know a little bit about what seems to be influencing where you are in this hierarchy, right? And those are the things that I've listed here on the left-hand side: safety of it, the liquidity, what are the use case, because one thing may be really high quality money in one use case, but not in another. But the key part, I think, is that a lot of it's going to be determined by a number of different actors, as in people will look at lead use cases or lead users, and those are the ones I've sort of put to the right-hand side. The various financial actors, the rating agencies, the regulators, and experience, who will say, okay, this is high-quality money. It can be used for this, or actually, rating agencies. I have a feeling at least that is going to be a big part of setting the stage for which money can be used for what, which then will reflect it again in regulations, as in you must be a AAA rated to be able to do certain things. Here is what we call, if you take this all the way through, you can think of this as the lower order money trap. So let's say you get stuck, as in you do not really feel that you need to improve your quality, but there are other in the market who continues to improve the quality of what they deliver. Well, firstly, you're going to face an opportunity ceiling, right? Because clearly there are now better alternatives, so you will never be able to become bigger than a certain size. That's the third part. The third part, the demand quality deterioration, is basically the mundane cases like trades and other things. If you have higher quality alternatives, that's where you will move. So if you stay there, you will also see a demand deterioration in terms of what are the quality of trades or quality of companies you're working with. And then the last part, which is an important one, which is that this curve changes depending on bull or bear markets. As in, when there is a bull market, you will find that people will use any kind of quality of money to get access to risk on assets, right? Because there are no risks in the market. You just need to be in the market. On the other hand, when there is a bear market, everybody wants to get to a safe haven. So the currency that you thought was okay is no longer okay. You want to move all the way up as close to the central bank money as possible. So that's near-death experiences for lower order money. So on one end, like if the quality keeps improving, those who stay where we are now, non-regulated, micro-regulated, as here in version 1, we will probably face this trap. That's what we think. Okay. Go to the next one. So where do we think it could end? Because this is sort of, as we all move up the quality chain, where should we get to? You can have your own opinion. I'm going to tell you what I could think or would hope to see, okay? I see, of course, the things we have here. What we hope to see is that all the people who are operating under MiCA and putting out very serious stablecoins will focus on high quality, developing safety, security, liquidity, all the things that you need to do to make sure that you are a good participant in this market and not just jump over the lowest bar. We hope that basically over time we should see that license to change to something like a tokenized financial institution or even a token credit institution that very likely will be able to produce money of higher quality than bank deposits. And we think can take a large part of it. Because the reality is that bank deposits and banks have plenty of problems, right? There's plenty of things to solve in the banking system. Fractional banking is not the safest place. Deposit insurance is not the right thing. You cannot have a place where heads we win and tails taxpayers lose. That system will not work in the long run. I think, honestly, the ECB and others will take the chance to use these as you can already see now, these digital euros and these licenses that are coming out to help do what we would call a market-led renovation or improvement of basically the overall financial markets. We all know that the financial market union has not been quite as good as it should be, and bank loans are way too big in terms of financing in the EU. So we think this is where we could go, but it requires that we continue to focus on quality, and that's sort of to come to tell us a lot more about that.
Yeah, thank you. So with all of that in mind, we've sort of come up with what we think is Eurodollar quality and how we want to build within kind of the Eurodollar system. So with that, we kind of, as an early participant, because the industry is still relatively young, we look at, well, where did it all start? We've seen kind of a lot of stable coins today have emerged out of a decentralized environment, which has been largely unregulated. And that's meant that the reserves have been opaque, governance perhaps not quite what we would expect to see, like we would see in TradFi. And that's given rise to single currency domination in the stablecoin industry, and that is the US dollar. That's kind of the reality of what the landscape is today. And also that there are limited use cases. So stable coins to date have very much been used for crypto asset trading as a safe mechanism to move in and out of higher risk crypto assets. And so with the introduction of MiCA, that's kind of changing the landscape, we think, for the better. And we're very much leaning into regulation. So I think MiCA is a really good starting point and is a massive opportunity for Europe if we harness it. And I think there's, time will tell how that evolves, but it's certainly an opportunity in our view, and that can lead to things like responsible reserve management, because now we're a supervised industry, taking the principles of governance that we've seen established in TradFi, because there are very kind of good practices that have been established that we can now move into the blockchain kind of environment. And we also therefore believe in diversification, both in terms of currencies. We believe in a multi-currency approach, as well as roles. And we see that in TradFi today also. There are very clear kind of roles and responsibilities. Even though we see some actors doing multiple roles, there are still kind of clear parameters around who is responsible for what. And that all feeds into a kind of a diversified environment. And we think that that creates an environment that's a lot more robust. And that will be quite critical, I think, to taking financial assets or the financial system rather on chain. So then we, Eurodollar, we've got our license under MiCA. We are issuing a US dollar pegged stablecoin to start with. And that kind of comes to the point that we're building in a current reality, but we are also building for the future. So that's why we started with a US dollar pegged coin, but we will look to issue stable coins pegged in other currencies also. And the next one we expect to launch is a euro pegged stable coin. So we think with that, we will see the emergence of a new type of actor, and Allan alluded to that earlier, of tokenized financial institutions. There will be a role for central banks in our view, as well as the commercial banks, but we think that there will also be kind of a newer role for these TFIs who really focus on stablecoin issuance as a role in and of itself. Because what we see, so like 3 core categories that we've worked to build to a very high standard are technological and operational, so bringing kind of the advancements that are offered by blockchain. Just move into this one, the advancements that are offered by the blockchain and integrating that with the security standards that we would see in traditional banking systems. Legal and compliance, or regulatory and compliance, that's where the oversight, having a compliance framework that is robust, kind of comes into play, and we've sort of built an entire framework around that. And perhaps the most important, prudent financial management, because as we see the sector grow, we expect to see kind of, the numbers are already pretty high. So we're talking today, we're looking at a $220 billion industry. We expect that to kind of grow quite exponentially, and I think we saw some numbers from Ripple earlier. So that means that the kind of prudent financial management that's been done by these newer players becomes really kind of critical, and that's around issuances, redemptions, and ultimately reserve management and the transparency that I think we perhaps haven't seen today improve significantly. So with that, as I've already said, Eurodollar is issuing a US dollar stablecoin. On the other side of it, we are also issuing a money market bond, which is essentially a financial asset that is designed to perform better than, say, an average tokenized money market fund in the traditional system. And that's kind of our other side of seeing the financial markets go on chain, because we really believe that this is a new wave of modernization of the financial system. And, you know, I think there are a lot of efficiencies to be gained by using the blockchain to do that, really. I think that's what, do you have any final words?
No, thank you.
Conscious of
because there's like time.
Yeah, exactly. Does anyone have any questions? We're happy to take questions.
Okay, so I'll take the one on the banking side. So there is this idea that a key part of what the banking does is a transformation, right? From deposits to long-term lending. So we make sure that there is if you don't have that, then the economy breaks down, you don't have growth capital, and so forth. Now, the reality is that that's not quite how it works anymore. For most markets that are very active, the wholesale funding market and the market is actually where a lot of the funding happens. And in fact, in a place like Europe, there's too much of a banking loan dependence, and it should actually be quite different. You can see it in most of the ECB reports as well. So we don't see that as big of a problem, that you would stop that, because as I said, if you saw the curve, hopefully you saw that it was two, it was both, that both should have a role. So we don't see that as being something that will stop the lending. What we see is hopefully it'll make a more market-based lending system instead, which is really where the US and those who've done quite well with innovation sit today. So we're not so worried about that. But that's a very big political, this is way above my pay grade. So this is a very political thing.
I think on the, I was just going to say, on the roles question there, so I have slightly what might be seen as perhaps a slightly controversial view. So so in terms of the banks, for example, I think stablecoin issuers emerge as a role and a player in and of themselves. We're seeing already some that are very close to institutional level if we just look at numbers. I think there's a business model for stablecoins just in and of themselves. It's not a product. I think oftentimes stablecoins can be seen as a product. So we get certain bigger players who think, okay, fine, we'll just issue a stablecoin. But actually, it's a whole business model in and of itself. And I think for mass adoption and growth, I think regulation is a really big and important part of that. But with regulation comes also the recognition of what this role looks like. So I do actually think there's a place for kind of newer institutions, to call them institutions, they've come out of kind of much smaller players where you see huge amounts of innovation and entrepreneurship. And I think because stablecoins are built on very new technology, I think larger players are better off perhaps even partnering or joining up with the smaller players that are really innovating in the space, as opposed to trying to create a stable coin as just another product, because I don't think it is. I think it has an entire business model, an entire kind of own responsibility.
We're over time. So thank you very much.